Good morning, everybody, and welcome to this week's episode of Signal with Snorlax, brought to you, of course, by Because Bitcoin and also me, Snorlax. Today, we're going to be talking about software, the heaviest object on Earth, question mark. I say that somewhat jokingly because one of the companies that I do like for a long-term play in software, at least software ETF, IGV, and obviously some of these large cap assets that are very heavily involved with it, right? Something like a Microsoft, an Oracle, etc. Why I feel like they can potentially define this next major move within markets. Let's go ahead and get into the charts. I won't ramble for too long in the intro. I can do that sometimes. I can ramble for a little bit, as you guys are already aware of, I'm sure. But regardless, we always open up by talking about the S&P. There's not really too much to talk about versus last week's episode. I mean, we're just kind of consolidating above our previous all-time high. Is this because we can't find more buyers? Is it because it's vertical accumulation ultimately before the next leg up? I was posing this question on last week's episode that mostly because I felt as though the rally that we had seen in broader equities has been mostly mechanical in the sense that we had oil down, we had vol down, because of these things, alongside obviously just incredible momentum from things like semiconductors. We were able to not only rip out of the FUD, but rip all the way back to all-time highs, kind of against all odds. So I don't really have any thoughts on the S&P here. I think you kind of need to let it kind of bake here, maybe for a little bit longer. I am still inclined to think that equities in general are in a high time frame topping process. And I do believe that over the next few weeks, really in May and probably June as well, we're going to see software likely start to mark down again, right? Which is the title of this video. It's why I'm speaking with you all today. And because of those things, I believe it's probably time for us to finally see a little bit more movement out of these markets. And will it impact large caps? So I guess that's kind of a separate question that you can ask yourself. But really the crux of the thesis has been, all right, well, liquidity conditions are deteriorating. Are they going to continue to deteriorate? And if that deterioration occurs, how will that impact more sensitive sectors for risk like crypto, like software and higher beta assets? Will it impact large cap assets, obviously like NVIDIA, the Mag 7, and semiconductors as a whole? So let's get into it, right? I guess we can kind of start with just broader liquidity, because I've been talking to you guys a lot. At least last week, I definitely talked to you about the relationship between U.S. Treasuries, showing this weakness that they are at the moment. The USD JPY showing the strength that it had been showing at the moment. And I think there's something else that needs to be said about USD JPY on today's video, but obviously yields are showing strength as well, even despite Powell coming out yesterday and leaving the terminal rate unchanged. We didn't get a hike, but long end rates still look to me like they want to go higher. So just to briefly touch on what I touched on last week, you have kind of like this we have this like trifecta of negative liquidity catalysts potentially lining up, right? Are we going to see USD JPY, the 10-year, and treasuries all kind of make a huge move at the same time? Now, I kind of assume that these would all make a move in the same direction, but this is maybe where USD JPY could diverge a little bit. And again, I'll touch on that here in a second. But I mean, to me, treasuries still look like we're headed lower in the near term and probably over the next few months. The yield, the 10-year yield still looks like it wants to go higher. So both of these things are, generally speaking, going to be liquidity negative for risk assets. So that still exists. So I'm getting the vibe from these charts that we're about to see moves that will be very liquidity negative. I think that's important to just tuck in your brain for now. Which brings us to the USD JPY, which diverged obviously from the other two pretty significantly over the last few hours. Why is that? Because the BOJ came out. I mean, they said this publicly this morning, but they are defending the yen. I don't have to tell you guys why they're defending the yen. I shouldn't have to, at least. I've been discussing this for a few weeks now. If we get a 40-year breakout on USD JPY, like all hell is going to break loose in the bond and yield market. But at the same time, they have to sell assets in order to be able to defend the peg. That's not just dollars. That's also euros. It's probably oil. It's probably U.S. treasuries at some point. And it's probably also these US tech assets as well, which you look at the way we're trading today throughout the market. Yes, the S&P is green, but what are the Mag 7 doing? I mean, Meta's down like 10%, and some of that is attributed to earnings, but you have Microsoft down 5%. You have Nvidia down about 4 or 5%. TSM is down. You have small caps and risk outside of crypto, which is interesting, but I'll still talk about that, of course. Also selling off. There's probably some relationship with this move down on the USD JPY. So I wouldn't say I have quite as much confidence that this ends up breaking higher as I did. I would still say that that is my read, but I also know if they're selling things, if they're selling assets to defend the yen, that is also going to be a little bit bearish for risk assets. So I think we're at a point where you're getting pinched on USD JPY. And I promise I'm going to spend most of this video talking about software, but I think this is really important, especially after what happened this morning. If the yen appreciates too quickly against the dollar, then the yen carry trade is going to unwind, kind of a bigger version of what we saw here. And if it breaks out, you get Armageddon in the bond and yield market. So I guess it's like they're walking a very tight rope at the moment. And I will be interested to see, obviously, how that shakes out. I do think that's why oil dumped overnight, is probably because the BOJ was selling some oil here as well. And we'll just kind of continue to see how that goes. But U.S. Treasuries, 10-year yield, those to me, I mean, for one, they weren't really that correlated with the USD JPY move, which tells me that it's kind of more isolated to that market. These still look like imminently we're going to see large moves in the way that we discussed last week, which brings us to software, the topic of the video, right? Why did I title a whole video after software? I've always kind of, well, for one, software is the largest holding of most of these credit, or I wouldn't say it's the largest, but I want to say it makes up about 25 to 30% of private credit and private equity value is just SaaS companies. So when this declines significantly, these companies are going to take a hit. That could also force them to deleverage in other places, which there's a whole contagion element to this that I've been discussing for a few weeks. And, maybe it doesn't cause contagion into large caps, but what I do know is that software looks terrible. And if software looks terrible, it probably means that private credit and private equity, as an issue for the market, isn't going anywhere. Now, a lot of people have been obviously building the case for why this should be bottoming here. And I will continue to say that I can't recall any charts that have bottomed in this manner. I just feel that the large cap software assets within this index do not look like they're going higher to me. That's not to say that there's not great discounts currently available within the software space, and I will talk about one of them on today's episode, but the broader software index, these large cap software assets like Microsoft, Oracle, and Palantir, which I will be discussing today, these look very, very weak. So like, do I have an analog or like a fractal for these charts? Of course I do. I mean, I'm a fractal chud. So of course I have a fractal for how I think these patterns are going to resolve. Ironically, I've been pulling from the XLE, not that it has any like specific relevance to software at the moment, but it was basically kind of this pattern right here, which I do feel looks quite similar to a lot of what we're seeing throughout the software space, right? This kind of like Cheeto in a door. You had your walk up, you had your impulse, you have your distribution range. You've got this kind of, is it a bottom? Are we crashing into support? What are we getting? And I think when you look across the board at a lot of these software charts, they look a lot like this right now, or at the very least, they look kind of like they're coming out of this big move here and about to see this markdown. Which, what do you know? Look at the timing, guys. What do I keep comparing this phase of the market for software, for crypto, and for some other assets to? It's 2008, September and October, that first big move down. And obviously, you can see that software mostly, or not software, but the XLE mostly bottomed here before the indices truly gave out, and definitely outperformed indices on that final leg down. But yeah, I think we're getting close to seeing this move down, at the very least from software assets. If that is any indication about the rest of the market, it might not be. It might not be. It might not impact large caps, or it might impact large caps more so down the road. But when I look at software assets across the board, they look exactly like this topping range that I'm seeing on XLE, right? We see it on IGV, right? We see it on Microsoft. I see this like crazy on Microsoft. I see it on Oracle. I see it on Oracle a lot. And I don't see it quite as much on Palantir, but I do still kind of favor like a Cisco type of markdown coming for Palantir, which again, if I'm following this as kind of my base case, it does tell me that the next few months will probably be rough for Palantir. Palantir makes up a big part of the software ETF as well. If we're just looking at Palantir, Oracle, and Microsoft and thinking, well, hey, these assets could be sitting at support and about to see that huge markdown effectively to like cycle lows, those are big moves that we're talking about on these large cap assets. I mean, that's like potentially a 50% decline that we're discussing on Microsoft. And that's not to say it has to be as violent as that, but I think for the timing aspect to me is more important here, because software gave some really nice pumps. And I think it had the chance, and it still does have the chance to kind of invalidate this thesis that software is likely headed to its 2022 bear market lows, in my opinion, or close to them. Maybe not an asset like Palantir, but some of these other large cap assets can definitely do it. We had these big pumps, and now we're seeing what I believe are some pretty aggressive bearish retests and rejections now coming. And obviously, I do believe this will have implications for crypto as well, which I will be discussing later on this video. But we can just we can fractal chud really quickly. I'll just show you guys a little bit instead of just vague posting what I think this fractal looks like. You guys can see it at the end of the day. You guys can put it on your own charts if you want. Like, I see it on all of these different software assets. Like, you see what I mean? And again, these fractals are never going to be exactly accurate, right? Like, I've been using Bitcoin not Bitcoin, but the Dow Jones in 2008 for software. Now, the timing is very similar, I think, to that Dow Jones fractal, but the structure obviously looks very different. However, I'll keep saying when we look at these structures, I've never seen one bottom when they look like this. In almost every chart that I've ever studied, the bottom ends up giving out, and on that next capitulation leg down, that's where you want to be buying. That's where I would hope to be buying. So you ask me what I think IGV, Microsoft, Oracle, and Palantir are about to do for the next few weeks, the next probably 2 to 3 months, it's going to be sell off. And if that's an indication for timing on a larger bull event for equities, well, I would say that timing ultimately lines up fairly accurately. However, I do like one software company, Pfizer V. I'm keeping an eye on it. People smarter than me like this ticker. I'm a fractal chud, not a fundamental analyst. I think Michael Burry really likes this one. When I was looking at this chart, I know it's kind of like a hilarious looking chart, but it's come down a lot. This actually reminds me a little bit of an old Oracle pattern here, a little bit. Not quite the same, but I thought that was interesting when I was keeping an eye on it. So Pfizer V could be an asset that I look to accumulate at some point in 2026 and over the next few years. This is a structure that's going to need definitely a bit of time to form a range, but I'm intrigued by this. I'm intrigued by this asset, I have to say. Again, mostly because smarter people than me are interested and find there's like I think the point is like there's still value within the software space. Like, it's not to say that software is bad. It's just bloated software companies are bad. Right. That's probably like the crux of the bearish thesis. And also a lot of these software companies are going to find themselves caught up in private equity and private credit contagion, which is probably a good time to talk about Blue Owl. I mean, we can look at a lot of different private equity and private credit charts. I think a lot of them look like Blue Owl did right here. Right. If you look at things, I think like KRE, I think that's the ticker, Apollo, Blackstone. There are a bunch of them. A lot of them look to me like they're in here. Obviously, Blue Owl gave a big leg down from there. So I would expect private credit and private equity as a whole to be selling off here. If software is going to be selling off, I feel like that should be self-explanatory. Private credit's probably getting ready for another leg down. But Blue Owl I have highlighted today specifically because I pulled this fractal actually from Silvergate Bank. I mean, who remembers SVB in 2023, right? This ultimately was one of the banks caught up in just kind of like very risky. We'll just call it very risky practices. Ironically, I've been seeing a pretty similar pattern with Blue Owl, and I don't know if this is going to end up doing quite this dramatic of a move. But again, I think the fractaling is not just about like targets; it's about timing. And if I think that this is getting ready to sell off, why am I talking about Blue Owl? Well, most of their exposure is to SaaS companies, like an overwhelming amount, which is also why they've been selling off much harder than other private credit companies. So I think a bit of a canary in the coal mine for that space within itself. But yeah, I'm getting ready for this to probably mark down again here over the next few days, in the next few weeks. Next few days, that's a little bit too short of a time frame, but I am getting ready for this to probably mark down again, which makes sense given kind of what I've just outlined with everything software. But I guess the question is like, okay, I'm very bearish on software ETFs and these software large caps. That to me, I feel pretty confident on. What is less certain to me is the timing around obviously large caps and indices. Do we see that contagion spread? Now, I highlighted last week how we were at all-time highs on equity indices, but financials had not followed suit. Specifically, financials with the most amount of exposure to private credit, Wells Fargo, have noticeably lagged the overall rally. Now, that could change. They could just be slow starters. But I am definitely taking some note of that, if I feel that the overall rally could be mostly mechanical. And if this does turn into a complacency shoulder of some sort, what does that downtrend eventually look like? Well, I can tell you just based on my read on software's timing, I kind of favor downside is coming for financials here over the next few weeks, assuming that it's time for this downside to now play out on some of these software assets, right? Again, like the timing aspect is the biggest thing I want to highlight here, not as much as the targets, but these charts, like even, I guess you could even say something like Oracle has kind of been leading the market because this moved off the low. I want to say way more aggressively and way faster than indices did. And you could argue that maybe it is topping much sooner than indices as well. In general, when I look at this Oracle chart, like this looks horrible. It really does. We held the low, but this pulled down 60 to 70%, guys. It's really rare that you see a chart that pulled down 60 to 70% within 6 months, rebound straight to new highs. I really can't recall that many charts that have done that outside of like a handful of altcoins back in maybe 2021. So to me, this is getting ready to sell off, probably leg down again. There's an unlimited demand for compute. Great. I don't even know what that means. Most people saying that don't even know what it means. But I can trade this chart, and I can tell you that this I favored that downside is more likely for Oracle than upside from here, certainly. And probably the same is true for IGV and Microsoft. But last thing, I like to end these by talking about crypto. Bitcoin doesn't necessarily as much look like the software chart to me. Looks better than ETH and Coin. But when we look at Coin, tell me this doesn't look just like IGV, guys. Even ETH kind of does look a lot like at least the topping structure, that at least what I believe to be a topping structure for software. So if I'm thinking that these charts are about to like leg down from fairly similar consolidations at support, this is the best one. I mean, shoot, let's just overlay Coin on it. Why wouldn't we? The same chart, guys. If I think that software is getting ready to leg down, I have to think that Coinbase is probably going to do the same. And as strong as Bitcoin looks right now, I don't know. I think for software to sell off and Bitcoin to continue to move up, you're going to need a pretty substantial divergence. But right now, these assets are trading very, very similar. More so ETH and Coinbase than Bitcoin. You're going to need to see a pretty serious divergence from software, in my opinion, to continue holding these levels. I believe we're getting very, very close to the scenario that I've discussed. It's definitely taken longer than I expected to play out, right? Especially for Bitcoin and crypto. Like, are we going to get that last leg down? Are we not? I guess we'll see. What's it going to look like? That's a big question that I have personally in my mind. But again, ETH and Coin look just like software. And I have a strong bias that software is about to take a big leg down. I think I've said software probably like 50 times in this video. So maybe you can make a drinking game out of it. But I'm inclined to think that crypto is about to leg down as well. And we'll see where that takes crypto. We'll see if it takes down the Mag 7 and equities as well. Maybe it doesn't. Maybe it's a timer or a delayed timer of sorts. We'll see. But the biggest takeaway I want you to take away from this video is like, all right, our bias on software is that we're probably selling off over the next few weeks, over the next 2 to 3 months. Some of these assets will likely trade down into their 2022 cycle lows. And if that happens, how does that impact crypto? How does that impact large caps? I hope, though, that ultimately this video did provide you guys with some signal, not just how I'm viewing the market, but also like why I feel the timing is still aligning in the way that it is. And maybe I have the timing just like crazy wrong. I feel pretty good about my read on, at the very least, software. So again, we'll see how it impacts large caps. We'll see how it impacts crypto. I think there is fairly tradable information if you are trading software or any of the software adjacents that I mentioned today. And yeah, we'll see ultimately what we get. But thanks again for tuning in, everybody. I hope to see you next week for another episode of Signal with Snorlax. Have a great rest of your week. Have a great weekend, that is. And as always, guys, stay safe.